What's up, everyone? Welcome into another episode of More Than Mortgages. I'm Chad Anderson. Today we talk about, is this a buyer's or seller's market? What is a buyer's or seller's market? We always hear this. It's a buyer's market. No, it's a seller's market. Well, what does that mean? Which one is the advantage? If it's a buyer's market, how does that impact you? If it's a seller's market, how does that impact you? What goes with those things? What comes of those things? Where does it flip? Where does it switch back to the other side of the seesaw? We're going to talk about that and a little bit more today, episode number 7. Happy New Year to you. Let's welcome in Zach Jones here to the stage. Happy New Year, buddy. How are you? How are things
Good,
going?
good morning, Chad. I'm good. Happy New Year to you. We're almost there. I'm feeling a little bit salty this morning. I don't care. I'm not buying what you're selling anyway, so I don't want to hear anything about this topic.
Look at you. I like it, man. Just come out of the gate swinging. Why not? Just start 2024 off like that. I mean, let's just, by the end of the show, let's, talk about inappropriate things and F bombs and just hit
That might
20.
be coming. That might be coming.
Well, it probably has been coming the way 2023 was, and how we're into 2024 now. What's this year going to look like?
Yep.
Here's what's so funny, Zach. I mean, we're going to define a buyer's and seller's market today because we were laughing about this a couple of weeks ago and said this would be a good show. Is that, do people even understand what that is? So let's define that. And then let's also talk about, was 2023 being a buyer's market, was that a little bit of an illusion? Because
Good
house
point.
prices are still going the right direction, guys. This isn't 2008. It's not going to be 2008. It just simply will not. It's not going to happen
Right.
in this next 24-month stretch. It's going to be crazy, in my opinion, and in others, and I think in Zach's, but we'll let him speak to that. But all right, buyers versus sellers. Zach, you're better at articulating a lot of these things, because I'll get on soapboxes and just get worked up. So buyer's market, seller's market, label the two, differentiate
Yep.
the two for us so people can understand.
I think best way to conceptualize this is that whoever has the advantage in the market owns it. So if the buyers have the advantage, they own the market, it's a buyer's market. If the sellers have advantages over the buyers, then it's a seller's market and they own it. So that's really the best way to understand this. And when you talk about advantages, it really kind of comes down to the financial advantage. So
Yeah.
if and I was thinking about this earlier, Chad, and maybe you can help me with this, but it's hard to kind of define advantage without concluding that, or it was in my thoughts this morning anyway, without concluding that advantage is in large part determined by inventory, or maybe more completely supply and demand. It's like I couldn't come
That's
up
it.
with an example where supply and demand didn't determine who had the advantage and whose market it was.
Yeah. That's all this is supply demand. And if there's too much supply, not enough demand, it's a buyer's market. If there's too much demand, not enough supply, then it's a seller's market. And the
Right.
seller's market, that's very simple. Like, there's honestly no need to go further than that. That everybody was taught in school a supply versus demand example. That somewhere in your 13 years of school, and then if you went to college, some teacher somewhere explained supply demand. They
Right.
didn't tell you other basic information like how to file your taxes, but you learn the quadratic equation. That's a whole nother topic for a whole nother day that I get frustrated about. But supply demand is all that matters when it comes to buyer's market, seller's market. I would say 97% of all that matters. Maybe all is a little too strong, but 97%
Right.
then is the number I'll go, or the percentage I'll go with. And when it comes down to it, the reason I say, hey, look, 2023 was an illusion, in my opinion. 2020 and 2021, and it was really, I guess, the back half of 20, all of
Mhm.
21, first half of 22, 24-month stretch. That was 100% a seller's market.
Yep.
Everybody wanted to buy. Rates were extremely low. Not enough houses were for sale.
So
And there
what did
were.
that look like? Tell us what that seller's market looked like. Where were the sellers sitting?
So let's say the seller, we're just going to use an average purchase price of $400,000.
Okay.
Okay. Somebody's got a house for sale, 400,000. Odds are that house 12 to 24 to 36 months prior to that market was worth $300,000. I'm not kidding. A
Yep.
33% appreciation during that 24-month stretch. Guys, that is 100% believable. What,
Oh, yeah,
depending on your market.
and more.
Honestly, it could have been a 250 house that's now for sale for 400.
Yep.
Okay? Like it was that drastic. And there was not enough supply. And so every time a seller wanted to sell their house, they would have multiple offers. And I'm not talking 3 offers. I'm talking 20.
Yep.
Literally 20. We're doing loans, guys. We're sending out multiple pre-qualification or pre-approval letters for the same buyer 10 and
Right.
15 times
Right.
because they're trying to find a house and
And that's
they
on
can't
opening
win.
day, right? That's on the opening weekend. The
Yes,
highest and best by 5 p.m. on Sunday.
people were begging to just take my offer. What do you need? Ignore everything else.
Right.
People were doing the coming soon and they never even had to go to market because they
Right.
open houses were half a mile long of people just waiting just to get into a home just to see whether or not they liked it. That's what was going on. Let's say you're selling it for 400. The winning bid was probably 450, 440,
Yep.
425,
10 to
420.
15% over. Yep.
Yeah, 425 to 450. That's what the winning bid was. Guess who paid closing costs? Buyer.
Not the
The
seller.
the buyers in some cases were even allowing the seller to stay in their own home for free for up to 60 days to find a place for
Right.
them to go buy.
Right. No
Like,
rent. Don't please take my offer. You can
yes,
stay here.
guys, I mean, it was insane. That's what a seller's market looked like. Now that's extreme though, but that is what we just came off of. That's
And
an
we also
extreme.
had the thing that we've never seen on a regular basis is the appraisal gap issue. Now, this is something that a lot of people didn't understand, and you don't understand it if you're a viewer today and you didn't go through it. But the appraisal gap is you've got your house on the market for $400,000. I'm going to give you 425, and I'm going to pay. I just had this come in on an offer last week. I'm agreeing to pay the difference between the appraisal and what my contract price is at 425 out of pocket. In addition to
Yep.
my down payment and all the stuff that I need for the loan, as long as the house appraises for 400, I'll pay you 425 for it.
Yep.
So these were cash rich buyers who could afford to do that. Guess who
Correct.
loses in that transaction? The first time home buyer that doesn't have any money to cover an appraisal gap because they get lost in the dust. They may offer 425, but they don't have the cash to make up that difference.
Also, veterans lose in that because they
Yep.
can't get the 100% financing unless
Yep.
they come up with the cash. But a lot of times, veterans aren't anticipating coming up with cash because they've been told, and it's correct, they can get 100% financing, but they
Right.
can't if there's a gap in that appraisal.
There's
So,
another little nuance here to the craziness that we saw in that extreme sellers market was that a lot of people were foregoing the appraisal values altogether, not even covering an appraisal gap, but they said it's not contingent on appraisal,
right.
and they were also foregoing home inspections.
Yeah. So,
We're
if something
we're
was wrong,
not
you had
going to
no
ask
idea.
you to pay. We're not going to ask you to pay anything toward repairs.
Yeah. Well, you could do an inspection to correct myself. You could do an inspection, but they weren't going to make the contract
Right.
contingent on repairing any inspections
Right.
or
Right.
deficiencies that were discovered during an inspection period. So you got all that going. A normal, though, I say normal seller's market, just to be fair and to give you previous
Right.
markets that we've had, that is, hey, if the list price is 400, you probably have to pay the 400. Maybe 405 or something like that, and you pay all your closing costs. or you
Right.
pay 400 and you pay half the closing costs, and the seller's willing to kick in half because they're good with that, and it's not in an extreme mode at that moment. Or a lot of times, and this is a little trick, somebody says, "Hey, seller's market, okay, well, I'll give you the 400, but can we buy it for 410, and you give me 10,000 in closing costs, and then if it doesn't appraise for 410, then we'll agree, that we'll do it for a 400, and then I'll just pay my own closing costs," or something. Like, you try to finance them in through the contract and so forth. But again, comes back to that appraisal gap,
Right.
and
Right.
what's happening there.
And that's a
Um,
more typical seller's market, what you're describing.
right. Yeah, that's more normalized. Okay. Buyer's market, homes for sale for 400, house sits on the market 3, 4, 6 months. Um, Somebody comes in, they've had some showings, no offers, maybe had a low ball offer. The right buyer comes in. Usually they're on an island. They don't have competition
Right.
surfing around that house, except the listing agent will say, two other people are looking at it this weekend. No, whatever. So then the buyer can come in and, maybe they start off with an offer of, after 2 or 3 price drops, and they say, all right, well, it's 400 now. I'll give you 370 and you pay the closing costs. And then the seller bounces back and forth, and you land, in the 380, 385 range, and maybe splitting closing costs. Every scenario is different. We're just kind of giving you a hypothetical ballpark ish, what it could look like and what you go through. That's more of a buyer's market. Okay. Now, the extreme buyer's market is everybody's buying foreclosures from the bank. That was 15 years ago. That's not going to happen anytime soon. Um,
Right.
Now let's look though at, as I alluded to at the very beginning, was 23 really a buyer's market? And I think you look at it a couple of ways, because it almost contradicts itself, Zach. A buyer's market happened in 2023 if you're comparing it to the markets we came out of in
Right.
2021, 22. It was still, though, a seller's market in the sense that houses appreciated in 2023. Now, the data just came out. Fourth quarter data is not here yet, so we don't know the final percentage of
Right.
appreciation.
For the full
But
year.
right, but through October, I believe
Hmm.
it was a 6% appreciation. So even if November and December dragged that down, and rates did spike in October, so maybe that caused a worse November, December. But even if it drags it down to 4.5, 4.75%, house values still went up.
It's a strong
They
year.
still went up.
Yeah.
So, but that's just funny, because you wouldn't think house values go up, but it was a buyer's market. So the reason I wanted to explain that or show that difference is because it's only a buyer's market in the sense that it was so hot before, it had no choice but to cool off. Like,
Right.
appreciation was still there. And I think some buyers also got frustrated because, and sellers too, and they look and they go, "Oh, I missed the mark. If you're a seller, I didn't sell at the peak." And then buyers are sitting here going like, they should come off the price even more. Like, no, because the data tells us house values are still going up. So that's like the 3% window that I mentioned earlier, where
Right.
the whole supply demand is, there's still a lot of demand. There's still a little bit of supply, but the interest rates and then people's mentality of, oh, I missed the peak. Oh, that's still too high. These prices should crash. They should be coming off the price more because it's been on the market 3 or 4 months. The reality is, buyers are telling you the story, and sellers. House values went up 6% year over year through
Right.
October.
Right. Right. So, and I wanted to flesh out one of the things that I referenced in last week's video, and that is that people confuse median home price with home value, and what
Yeah.
you're talking about is a 6% ish appreciation in value in 2023 from the value in 2022. In spite of the fact that for about 9 or 10 months of this year, we had a decrease in the median home price, which really is just a look at the average price that people paid for houses that were purchased during that period of time. So again, you look behind the curtain a little bit, it makes perfect sense why the median home price went down, because people were buying cheaper houses because money was more expensive over here. So interest rates were up. They just bought a little bit cheaper houses and brought that index down. But it didn't mean that home values were going down. It just meant that people were buying cheaper houses during that period of time. Now, we've seen median home prices go up in the last couple of months, the last 60 days, and then we see this annualized return on home values. A point here, real estate is always hyper local. And so what we're seeing in Middle Tennessee right now is kind of this combination between buyers and sellers markets. They're kind of tipping on one side of the fence or the other based on how desirable a property is, how far out of the county it is, how well it's priced. And so, if I'm telling my buyers, hey, listen, if you're looking on opening day, you're probably, the advantage is to the seller. And if you're making an offer in the first 7 to 10 days, the seller has the advantage because that property is getting a lot of views. But if you're looking at a house that's 3 weeks, 8 weeks, 12 weeks old, and it's sitting on the market, maybe they've had a little price reduction, or maybe they're on the edge of one, the seller is, or the advantage is moving a little bit more over to the buyer. But we're not seeing these massive swings where we've got, gigantic incentives, except in the builder business, and that's a different animal altogether. But it's very interesting to watch this. And as we kind of get into the new year and watch what happens with these rates, if rates stay steady or move up, we'll probably see the advantage kind of continue to slowly be at least on the side of the buyers, and maybe tip a little bit more in the side of the buyers. But if rates go down, it's my belief that that's going to create more pressure on inventory, which is going to raise prices, and it's going to put the advantage more in the seller's side of the equation.
Yeah, and when we talk supply demand, here's another reason as to why Zach and I both believe that this is something that's it's almost like a reverse bubble that's about to pop.
Right.
Because if you look going into those years where appreciation spiked and home values went through the roof, there was, if you're doing a scale, there were, it was 8-9%, I want to believe it was on the chart. I think it was referring to percentage of homeowners or people who were ready to buy what was defined as ASAP, and that was less than 2 years. So in the next 24 months, people were surveyed, said, I'm ready to buy ASAP. Okay. Well, we saw what happened. Well, now if you look at how many people are ready to buy ASAP, that number is doubled previous years. It's up in the 16 to 20% range.
Pinned up demand.
Correct. And the reason that is so important is because we've said it, people mentally can't trade a 3% rate for a 7% rate. People can get on board with trading a 3% for a 5% or a 5.5%, as long as they're getting something in return, and the return is the equity that's built up in their current home. Think about this, folks, and we'll wrap this up today. But think about this as well. I was talking to my uncle about this the other day, and this isn't the random like Christmas dinner uncle who's been in jail and never actually gone through the home buying process. Okay?
Not crazy Uncle Joe. This is the other uncle, the smart uncle.
This is a smart uncle. Yeah, this guy is super analytical uncle here. All right, this guy knows a lot about just things in general. But what happens with this is that we were talking about people's equity and rates and, home buying process, and then just demand and supply and the whole thing. And what I told him is I said, think about this though. You're saying, oh, nobody wants to sell their house because they got a 3% rate. How else do you get your equity? Like, I can't stress enough, equity is truly pointless unless you have something that makes it exit. Like, how do you ever touch it? You could be worth $500,000 in home equity on paper, but if you can't touch it or spend it or use it, then what good is it? Seriously, like, that is a question to think about. Like, what good is it to have it if you can't touch it or use it? You say, well, yeah, we'll just use it. Well, here's how you use it. You either sell the home Okay. Well, now you don't have your 3% rate anymore, but you sold your home and now you have all this equity. You can refinance your home, do a cash out, but you're going to trade that for the same interest rate, actually higher interest
Higher.
rate than if you
Right.
just purchased a home, right? But you do get to keep the asset if you think it's going to continue to appreciate over time, or you want to be a landlord or whatever the case is. That's fine. And then the last option is a HELOC, which is obviously popular right now. But HELOCs are 9%, guys.
Right.
And that's if you have good credit. So now you're at a 9% HELOC on $500,000 or 300,000 or whatever number you pull out or want to pull out. Now you have that payment. So when you combine that payment with your house payment, what is your blended rate? Like when you average the two together, what rate are you really paying back on your home? Well, 9 at 200, 300,000 and 3 at 3 or 400,000, well, your blended rate's somewhere in the fives. So my whole point to him, and that I really am trying to get across to people, your equity means nothing because you can't touch it. So you have, like, if you want to use it or spend it, am I missing one, Zach? There's 3 ways: sell, refinance, or HELOC.
Yeah.
Like, that's it. There's 3 ways to get it.
Right.
So my point is, people were not willing, or are not willing yet. We're not willing to trade a 3% rate to get their equity for an 8% rate. They will come to terms with the idea that I can get my 2, 3, 4, $500,000 out of my current home if the rate's 5 or
Right.
5.5, or
Right.
because it's the only way they're going to get it. That's it. And so I just think that's important for a lot of people to understand that there is no way to get your equity except those 3 ways. And when you do that, that's where the pent up demand is. And that's what could cause another like crazy market. Neither one of us think it'll be anything like the last couple of years, but we do think it will be pretty intense.
Yep. Absolutely.
All
Good
right.
thoughts.
Yeah. I mean, we'll see. What do I know though? Right. I mean, we're just a couple of morons with a camera and a microphone, Zach, and a license. That's it.
We're still trying to read the tea leaves, but I hope that we're applying some logic and some reasonableness to what we're talking about. And that's where it comes down to, all the crazy talk and the slogans and the gizmos and the gadgets. If our ideas pass the reasonableness test, then we're trying to operate on better information, better data, better projections.
Yep. We use this to try to get people to think
Yep.
and look at it from all angles through all lenses. And I hope we do that. And I hope we get that message across. We've got quite a few videos stacking up on the YouTube channel. So make sure you follow Zach and myself. Let me see if I can get these up here for us so that we can actually promote ourselves a little bit here. There you go. This chat is real. It's my handle at Zach Jones Loans for Mr. Jones over there on the right. YouTube, Instagram, Facebook, Reels, Stories, some YouTube content, videos, whatnot. We've been doing this for, what is this? This is 7.
Right.
And then we're getting ready to dive into a lot of the mathematics side of it and some of the different formulas and angles and food for thought and whatnot that will, I don't know, maybe it'll give you horror nightmares or something, but it's still good information that you should at least understand and know. So make sure you follow us, like, subscribe, hit the bell, comment, DM, whatever you'd like to do. We enjoy the interaction and collaboration and chatting and hanging out. So we hope you guys enjoy this as well. But for Zach Jones, Chad Anderson, have a great rest of your afternoon, and we'll catch you next week.